Stock Trader Network pre-market prep. We are here with another episode of Options Unchained with CC Lagator. CC, how is your Wednesday going?
Good. Yeah, it's going well. Pretty lazy day in the market leading up to a bunch of stuff.
Pretty lazy day in the market. Just a little look at futures here. SP 500 futures trading just over the 7,000 level, 7,004. I know you like to look at the SPX. SPX trading around 69.75 and a half or so. We do, folks, have a Fed rate decision coming up at 2 p.m. Eastern time in about a half hour here. We also have a press briefing with Fed Chair Jay Powell at 2:30 p.m. They like to say the devil is in the details. We'll hear any details from Jay Powell at 2:30 p.m. The conclusion here for the Fed is pretty much foregone that they will not do anything with the interest rates here today. CC, how are you feeling about the Fed heading into the next half hour or so?
Yeah, I think the statement itself, like you said, it's pretty much known what is going to be in that. The press conference is always the interesting one.
Could be fireworks.
Yeah, I mean, no, probably not.
I'm
But
glad you detected my sarcasm.
yeah, exactly. But, he, occasionally lets like some sort of like inherent mood going on at the Fed to slip. So what
Sure.
that would
No,
look like
yeah.
today, in order to move markets would have to be something like, just tons of disagreement within the committee and, like
Sure.
they seem sort of clueless, like
Yep.
anything like that would be like, oh shit, like, the market might go down. But
Yep.
other than that, I can tell you that, like right now the market is pricing into the close. You mentioned SPX is right at 69.75. It's pricing about a 25-point move to the upside, which was this morning's lows essentially, or
Yeah.
higher.
Yeah.
And then a 25-point move to the downside, which is 69.50 or whatever. And I will say that like the two intraday moving averages I watch are basically converged right here at like essentially 69.75. So we are probably at this level for the next half an hour, and then it's going to take some sort of surprise in that presser or something to move this dramatically. I doubt we're moving more than 15 to 25 points in either direction following the Fed, which is essentially nothing. And I think that what's happening after the close is way more important to where the market goes next. And
Absolutely. And that is, of course, the big cap tech earnings. We get Microsoft, we get Meta, we get Tesla a little bit later in the after hour session around 4:20 p.m. So much hangs in the balance here. And I think, obviously that's where your title for the show today, it all comes down to earnings.
Yeah. And so we've been talking about this for weeks now, which is, this year has been into year end and into 2022, we're almost to the end of January now, has been pretty fascinating from a market setup standpoint, because everyone was saying last year, the market's only the Mag 7, right? The market's only the AI trade. And those things, apart from pockets there, like the storage stocks and all, which we've spoken about, NVIDIA and a lot of those names, NVIDIA's essentially gone sideways for 6 months. And Microsoft and Apple and, Meta, those names have actually kind of been quite weak over the last, 2 months or so. And it was sort of everything that everyone was saying, like, I guess you could consider them the bears. They were basically saying, you need this market, you need the rally to broaden out, right? We got that broadening out, I would say, over especially, this month to begin the year. I mean, IWM ripped. You had all kinds of other sectors doing well, taking up the slack for those mega cap tech companies, which is essentially stalled. However, we are basically in the same place on the SPX, right? That we've been like, we made new highs yesterday, but these are not dramatic highs. We hit these levels back in October, if you remember. So the mega cap tech companies, it turns out there's not enough market cap in the other, 490 or so stocks to make up for the fact that these things have essentially gone sideways and seen some weakness in some cases, like the Microsofts of the world.
Sure. Yeah,
So
absolutely.
the title of the show, it all comes down to earnings. I don't think, I think pretty much the next market move is going to be determined by these stocks. And we've got all the, the noise that happens, coming out of DC and all that, like takes us, scares us for a second, and then tacos or whatever. But, this, if we are going to break out above 7,000 in the market, which we tried to this morning, but there was no way that was going to hold into Microsoft and Meta's earnings. If we're going to break out from here, we're going to need participation from those stocks. And so I think it does all come down to these names. It's not going to happen tomorrow because you've still got Apple tomorrow, and then you've got Amazon and all next week, and then you've got Nvidia and Broadcom, a couple of weeks down the road. So, but I think, this will be the first sign of where we go next, is that, these Microsofts and these Metas and even Apple to some extent have rallied into this number. Do they hold that bounce, right? Do they go higher? Because I think if they start to go higher and they all kind of point in the same direction, yeah, we might break out here. And I think it would be pretty obvious if they all moved in unison.
So let's get to, you want to get to some of the expected moves here for the big boys and ladies here?
Yeah.
Okay. Okay, so you always put such nice images together here, CC. This is one that we've like become familiar with. Your big earnings reports for the week and the expected moves. We have again Microsoft, Meta, Tesla tonight. We have Apple tomorrow. We have SanDisk, I believe, on Friday.
Doesn't that SanDisk number look hilariously low considering the stock?
Was it higher? Was the expected move higher like last week or something?
It might have been, but like it's sort of one of those names where it doesn't need any excuse to move 20%, right? So
Yeah.
earnings is just like another day maybe for that stock. And that's one of those ones where it's sort of like, if you're making markets and the options, the math just sort of breaks down at some point. You're like, it's like a biotech stock. It's like, I don't know how to price this.
Yeah.
It could move 50%. I don't know. So that one's hilarious because it's 11%, and watch it only move like 2%.
That's I was
Yeah.
gonna say, like, maybe the contrarian call is that the stock's like up or down 2%.
Let's look at that one, because that would be a fascinating bet. But you'd have to get out immediately, because then like on Friday it'll move 25%. So all right, so let's talk about this a little bit and why these expected moves are important. So this gives you a general sense, I would say, if you're invested in these names, if you are looking to buy these names, this is like where the market is pricing all of those people trading all of those options. This is where they have basically arrived at an equilibrium of the, sort of like the point spread in a football game, right?
Sure. Yeah.
So the reason these are important isn't necessarily that it's going to move exactly, Meta is going to move exactly 6%. The reason they're important is they give you a really good sense when you see the reaction, especially, that did it catch the market off guard or not? And one of the things that basically these numbers you see right here in that kind of range, and I did it a couple hours ago, but the market hasn't really gone anywhere. So they're probably all roughly correct, give or take a few dollars. When you see a reaction and it goes and challenges about a 5% move in Microsoft, or a 6% move in Meta, or a 4% move in Apple, watch how the stock reacts at that moment, because what's happening behind the scenes is a lot of positioning has basically set up for a move roughly that distance or within that distance. And in unexpected moves and earnings, about 65 to 70% of the time, a stock will stay within its expected move, right?
Gotcha.
So that means it either goes like our joke about SanDisk, it either does nothing, or if it makes a move, SanDisk moves like 9-10%, right? And then finds sellers to the upside or finds buyers to the downside. And that has to do with all of that positioning, all of that market structure happening behind the scenes. Now, what's interesting is you take a stock like ASML, right, which reported, was that this morning or last night? This morning, right?
It was like very early this morning, like
Okay.
I want to say like 1 a.m. or something.
This one was kind of fascinating because you don't even really pick it up in this 1-day chart, because pre-open, I want to say it was like 1600, right? So it spiked higher on earnings, and it was basically, the expected move was 6.5%, and I want to say it was up 6.5% pre-open, right?
Okay.
As soon as it starts to fail at that level, like, watch out, right? So it goes up, it tests like the extreme. It's almost like it's a short squeeze test in a stock, right? So ASML opens, it goes up almost exactly to what options were pricing, and it's unable to break through. It
Yeah.
starts coming down, and that's like a really good sign. It's like it didn't catch the people that are short. It didn't catch the people that are short calls. It didn't catch them enough offsides to like basically squeeze them, right? And we see the stock pull back, and it's, this thing might end up unchanged on the day, right? So, and it is roughly, it's down about 2.5%, right? Now, Texan, I haven't checked in on that in a couple of hours, but Texan was interesting. So Texan's up 9%, and this is almost like the opposite, right? So I had Texan as a 6% expected move, right? And if you look, that's essentially what it did after hours and this morning, right? It was up about 6-7%, I want to say. Then look what happened. It holds that level. It starts testing higher, 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 and it starts to break through. And I would say we have that. Let's do STX too, right?
Okay.
So what I would say is, if you see a move about in line with the expected move and it gets through it, even by a couple of percent, and it's able to like hold that, this is now up 9%. It looks like it's been as high as about 10%. That's basically confirming a trend, right? It's caught enough people off sides that whoever was there to sell basically at the expected move in whatever form, they they couldn't do it. They couldn't get this stock back down, and this thing is probably headed even higher to like 220 or something over the next, depending on the market, overall market. Seagate, another case like this. So I had Seagate's as 10%, right? Almost the same exact chart. So this actually broke through on the open. So it was about a 10% expected move. It opened probably about 15%. And, I'd have to look at what it was doing after hours and like pre-market or whatever.
Yeah.
But it almost like immediately showed its hand that this was going to be a move that followed through, right? And you got this. It was basically in the below 430 on the open, and it just kept powering through. And now it's adding on essentially like another 5% to its gains today throughout the day. So, and even if something like this came back in, into the close, I would keep in mind that kind of like, obviously the open and the 10% and like these lows in the first hour or so. I would keep them in mind, because if it were to fail there, what I just said changes, obviously, but you kind of keep that in mind, keep that that expected move in mind. And I actually do that through the week of my trading. So if we were, just talking about like the SPX move thus far, I am sizing this SPX move up versus what the options market was pricing for the week. Because if you start to get towards those levels that options were pricing for the week, you could just pick a random time frame. How much stress is happening behind the scenes of the people, that are potentially off sides. And if you see those, I'm pretty sure the expected move was essentially 7,000 into this week. We went up there this morning. Sellers emerged, pushed it back down, right? That's a sign that we're sort of channeling for now until something is able to break it beyond that.
7,228 was the high, right
on the minis.
on SPX.
Yeah, like look, like we hit, this is kind of amazing. And so we've talked about some of my sort of SPX, trading and all. What I'm generally positioned at right now, and I have one today, that's a 69.75, 7,000, 7,025 butterfly. So I'm targeting the 7,000 level. I have those out over the next couple of days, and I put them on when we were lower last week. And yesterday at the close, I laddered up a little bit, and I did a 7,000, 725, 750, 7,050 butterfly that expires about a week from now. And what I'll tend to do is I'll kind of ladder those up, and I'm taking off the short duration ones if I'm getting my move. So right now, for instance, I will have to take this one off at some point, and I'm generally paying, these are 25 wide butterflies, and I'm generally paying about 250, depending on what the market's doing, somewhere between 250 and 3, let's say, for them. So it's essentially a 10-to-1 payout. Like, it never happens that way because you don't get an exact pin. But what'll happen is if you get your move up towards it, you generally get a chance to take that thing off. So the one expiring today right now is trading $6. If I get a move up, like on the Fed, I get up above 69.75, and it looks like it's going to run, I'm going to try to take that thing off anywhere from 750 to 14 or something like that. And I'm letting the ones expiring tomorrow and Friday ride a little bit. And then out to like Monday and Tuesday, I'm laddered up a little bit more. And I'm sort of like trying to trend ride with very low premium outputs. So anyway, that's like a kind of a nerdy, we can go over that one day on like the STN room where we just sort of dive deeper into that. My hunch is we get up to 7,000 like this morning, and there's going to be some hesitation to break above it. And I think we're going to maybe go sideways if we do, if the Microsoft reaction is good, if the Meta reaction is good after the bell, we probably get right up near 7,000 and kind of channel up there for a little bit until we hear more, till we get Apple, till we get Amazon, till we get that kind of stuff. So I'm just sort of positioning for that. And the flip side of all of that is if these suck, then what's kind of interesting is like, 69.20, I would say, which is basically the expected move for tomorrow to the downside. 69.20 is a level to watch. And, if the reaction to Meta and Microsoft together, I don't know if Tesla matters. It's sort of its own story.
Totally.
Yeah. But Microsoft and Meta, if the reaction to those is negative and they don't bounce immediately in the morning, I think, there's room to go down here. But I think it's sort of like what we saw last week. It's like the first check tomorrow would be 69.20. Then you obviously have to pay attention to 6,900. And then, it's sort of like the stuff we saw last week, but I doubt that's going to happen. I think if we react negatively tomorrow, we're down to like 69.20, and then you see what happens there.
Okay, gotcha. Chewing on a lot of stuff here. Which I like too. And I'm pretty hungry right now. Okay, so you're giving some good hints here, and maybe I'm kind of segueing into your next card, but I mean, what happens with volatility after these earnings, and also like for a trader or investor who is long one of these big cap names, do you have any thoughts for hedging?
Yes. So let's go to that card. I sort of took a tangent on my own personal SPX trading.
I love hearing. Maybe I don't speak for the audience, but I love hearing when you're like, "Oh, I got this one on today." I'm like, "Oh, where's the popcorn?"
Brent was texting me. He's like, "You're going off subject."
I was not. No, I was not.
So, all right. So we talked a little bit. Whenever I was talking before 10 minutes ago or whenever it was, that paying attention to the expected move. So that's sort of the first thing on this card. And I'm saying that I'm saying that more as like equity traders, right? Like even if you don't trade options,
Yeah.
know what that expected move is, because that is going to be, you're going to be doing all kinds of dumb stuff pre-market and after hours if you don't know that, right? So just know what that is, watch it. You know, like if there's a 5% expected move and the thing's moved 8%, like, all right, the market's off sides, traders are off sides. That could be fireworks, right? If it goes up and it's like 4.5% and the expected moves 5%, and then sellers start to come in, you're like, all right, I've seen this movie before. It's going to, you know, it's not going to be that move. You obviously have that initial reaction is, you know, obviously the conference call usually comes, you know, 45 minutes, an hour later and everything. And so this all applies not just on the release, but on the earnings call. You're going to see, if you're really in one of these things, you got to pay attention to what the stock's doing to during the earnings call. You don't need to listen to it, but you should be watching what the stock's doing, right? So generally, I don't listen to earnings calls, and they're too boring. But I do watch, like if I'm involved in something and it's moving massively during the conference call.
Yeah.
I will be like reading what people are saying, like they're pulling excerpts from it on Twitter or whatever.
Right.
So, and then I'm like, oh man, okay, that's why it just moved 5%. So that all applies all the way through the conference call. The vol crush after, which you just got into, is generally like you're going to see, if you had options expiring Friday on a stock reporting tonight, you're going to see those get cut in half premium wise, right? So you're going to get your move, and all that extra premium, if you paid, you know, $5 for a call, it's going to, and it's all extrinsic premium, meaning it was all fluff, it's not in the money. That will get cut to $250 if the stock just went sideways, right? Or more sometimes. Okay. And then if you're involved in options, so this is an options part, if you're involved in options a month or a month and a half or 2 months out, you're going to see less of a decline. So if it's like the month out, you know, 25, 30, 35%, those things should deflate, you know, now that there's more certainty. If you have options 6 months out, it might only move like 5 vol points or something. So it's not that big of a deal, like the farther out you're going, because those are priced for longer term trends in the stock. They're not necessarily like super hyped up on that earnings that's happening that day. So you have to be aware about that. Like if you have options expiring even in a month and a stock reports, you are going to see them get cut into tomorrow morning, right?
Yep. Okay.
So, and it's the first thing when I was an options market maker, you walk in the morning and you just dial down the IV, right? Like the stock reported, you just literally crank the IV from 60 to 40 or whatever it is. So watch if the stock tests its expected move. We got into that. If it holds the move and reverses, that usually was the test. You already saw it. If it explodes through, that's typically the new trend. We talked about that. Hedging a position into earnings has to do with what we talked about in the vol crush. You have to be very careful that you don't waste a ton of money. And so the way I like to think about stuff like that is, let's just use, do you want to go to my screen and we'll do SanDisk?
Oh yeah, sure.
I think this would be the poster child for if you're long SanDisk, right? Like, you know, you got to be a little worried going into tomorrow. So, or, you know, and so what I would not do here is I probably wouldn't cap my upside, or if I did, if I felt like I needed to pay for protection by selling something to the upside, there's no way on earth I'm doing it in the form of a covered call, right? Because I don't want to, like, I've ridden this thing from, you know, 0 to 500. The last thing I want to do is cap my gains at 550 or 570, right? Like I want this thing to go to 1,000. So if I was selling a call spread, like let's say up at 575, I would define the risk, right? So I would be selling like a 575, 600 call spread. And then if it goes to 750, you know, I just cost myself just that $25 of the move, right? I don't want to watch it go to 750 and then be like, damn, I got taken out because of my call, right? My short call against my stock. All right, so that's number one. If you are hedging to the downside, which something like this, the way I would see it is how much of a move lower could I survive in this stock? And again, if you've ridden a stock up from 30 to 50, or you got involved somewhere here when it was 200 and you've ridden it up to 500, or even as part of this move, you're probably pretty secure in watching this thing make big moves. So therefore, I wouldn't be paying a ton of money to hedge, this thing going to 460, right? Like, you better be able to survive a move to 460 if you're in a name like this, or else, like, what are you doing? Like, just sell it right now, right? So
Totally.
what I would be looking at is I would be saying, all right, at what point am I going to be making bad decisions if this thing goes lower, right? And that might be below 450. Like if this thing puked tomorrow morning and it was below 450, and then I'm like, oh my God, I got to sell or something. That's what I would be looking at. I would be looking at stuff that is like kind of an out of the money put spread where I'm not spending a ton of money to do so. Let me just zoom in here a little bit.
Okay.
Where I'm not spending a ton of money to do so, but it's enough to sort of keep me in this stock. Let's go down to like 450, right? So 450, let's go. All right, this is like a 450, 400 put spread. I like that on the chart, right? Like I want to be able to survive a move that if it went down 25% on earnings, I'm protected for almost 10, basically half of that move, right? That's the kind of trade I would do here. You're risking like $4 to protect up to like $46.
Sure.
That's the kind of cheap hedge I would do in a crazy stock like this. And that's like, because I want this thing to go to 1,000. But this is the moment where it's like, thank God I put that on. If this thing did go down 25% on earnings, be like, thank God I put that on, because now I can kind of like think about this in a clear, headspace. And do I want to sell this? Is this thing over? Was that the, blow off top?
Good stuff, CC. We got a minute 30 here until the
Fed
Fed rate
coming.
decision. We're not like expecting too much exciting on the Fed rate decision right at 2 p.m. Like 98% chance that there is going to be no rate cut. That's according to Fed Fund Futures Bettors showed on the CME Fed Watch tool. And like a little bit of a abbreviated session here for options Unchained, but of course we have this major event that is going to be happening in a minute here, so we wanted to keep it like a little light here, a little shorter today. Apologies folks if we haven't been able to get like questions or tickers. It's something that we usually do for options Unchained. If you throw us some tickers, we can have CC take a look, but we're gonna save those. We'll save those
We'll be
for
back Friday.
Yeah, exactly. SCN, CC is in SCN every Friday at 1:30 p.m. Options Unchained public show here on YouTube, but we have CC inside the SCN room on Friday at 1:30 p.m. for kind of like it's scheduled for a half hour, but we kind of stay on for like an hour a lot of times. CC, it's fun, it's a little lighter, it's a little more familiar. 10 seconds here until the rate decision. Did you want to stay on for a sec while this breaks, CC?
Let's do it. You got to read it like who does it on CNBC, like Steve Leisman or whatever. You got to read it like him.
I'll try my best. Now I feel nervous. All right.
Don't screw this up.
It's it is after 2 p.m. I am standing by for the rate decision. U.S. interest rate decision, actual 3.75. No change to interest rates, unchanged. Thanks, Tiny Pie. Futures selling off just a little bit here. Like as we were expecting, this looks like it is a nothing burger. I am going to click into the FOMC statement and see if I can just pick up if there's anything exciting. We are getting a couple points here and futures.
Lifting a little. Here we go.
Yeah, here we go.
Yeah.
Let me.
A bunch of nerds are pouring over like the dot plot right now, right?
That's what I'm doing. Are you calling me a nerd?
Yeah, you're a nerd.
Available indicators from the FOMC statement. Available indicators suggest that economic activity has been expanding at a solid pace. Job gains have remained low, and the unemployment rate has shown some signs of stabilization. Inflation remains somewhat elevated. The committee seeks to achieve maximum employment and inflation rate of 2% over the long run. Uncertainty about the economic outlook remains elevated. The committee is attentive to the risks to both sides of its dual mandate. In support of our goals, the committee decided to maintain the target rate for federal funds rate in considering the extent and timing of additional adjustments to the target range. The committee will carefully assess incoming data, the evolving outlook, and the balance of risks. The committee is strongly committed to supporting maximum employment and returning inflation to its 2% objective. I'm scanning over here. That was kind of, I pretty much read you the full statement here. So initially, like the statement seems pretty favorable, right? Solid pace, economy expanding at a solid pace, job gains have remained low, unemployment rates showing signs of stabilization, inflation remains somewhat elevated. I don't think that comment is gonna scare anybody or surprise anybody. So overall, pretty favorable response here from the Fed. We are seeing a little bit of profit taking here now. If you're looking at S&P 500 futures, now below the 7,000 level.
Well, this is interesting. So the moving averages I was just watching during that, they were up at around 69.75. It initially popped a little bit, not much. We're talking 4 or 5 points. And then it didn't follow through. And now it's doing a little bit of test to the downside, but
Sure.
no, this is like a nothing burger. But
Yeah.
we are, if to be cheeky, we are near 69, 69, 69 in the cash.
So cheeky.
So, but you know, my hunch is that this probably like we're kind of seeing the reaction right here
Yeah.
until Powell speaks.
At 2:30.
Given that statement, I can't imagine the presser being that exciting.
Probably not.
So they're gonna hammer him on the Fed independence, right? You have
100%.
the Supreme Court ruling on Lisa Cook or whatever.
Yeah.
He's going to get all these things, and he's going to say, "I can't comment on those things."
100%. Yeah.
Right?
Yeah.
And
100%.
then he's going to, so it'll be like a general, and then about like, oh, are you, staying on? Are you getting replaced?
Totally.
All that kind of stuff, which he
Yep.
won't answer.
Yeah.
He's a pretty smooth, like he handles those situations really well, I would say, but they will try to get him going. And I think it'll be just a general mood read, but like, I really don't think we're going to do much on that, even that press conference.
Yeah.
And I think we're probably going to be, within 10 to 15, I don't know, we'll see. But like, I think the stuff after the bell is what matters, because like, think about the market cap reporting after the close. So if those things, especially Qs,
Trillion.
and then we'll hop off real quick in a second, but like, I just kind of want to like point out, like, obviously these things are going to move the Qs. Let's just look at where we are there. The Qs are like right at the highs, right? So right at these late October highs, which were 635. Yeah, so like 635. Keep an eye on 635 in the Qs, right? And IWM, one last thing, very fascinating what's going on with that the last couple of days. So this was raging to start this year, right?
Yeah.
And it's, like what we started the show with. It's like the rally was broadening out. Now look at what this has done. I would say this happened. This like kind of, essentially sideways from, 2 weeks ago now. This is when people started getting back into Microsoft and Meta and all, right? So the money positioned for alpha right out of the gates in the beginning of January, and then it was like, maybe Microsoft's a buy into earnings. So now it's going to be interesting, because it's like a lot of these stocks moved back into the middle of their recent ranges. Like, I want to just show you, if you look at Microsoft and you say, once it broke down here, if this is roughly a range, like 500, 505, down to, let's say, realistically down here, like 450, let's say, this thing is basically back in the middle of that range. And so if it goes to the upside, it's going to challenge that 500 level and see if people are off sides. The expected move is 503, right? So keep an eye on that 500 to 505 level. If it gets above 505 or even 503, people are off sides. And this rally wasn't even enough, right? If it goes down to the downside, we're talking, 457 right now is the expected move. Watch that level, because if that does not hold at 455 to 460 in that range, if that doesn't hold, man, this thing could get ugly, because that's a really nasty trend line that would form.
Yeah, sure.
All right.
CC, always a pleasure. CC Lagator, one of the co-founders over at Options AI. Options AI is the platform that CC has been browsing around on through all of this episode. Great little platform. Check it out. There is a code if you want to try it out. The code is STN Options AI. If you wanna check out the platform. CC, always a pleasure. We'll see you on Friday.
We'll see you.
All
Thanks,
right, later.
everybody.